What if money no longer needed banks, governments, or permission? What if value could move globally, instantly, without trusted intermediaries? In 2009, a mysterious system challenged traditional finance forever. That system was Bitcoin, and it quietly started a global debate. Some call it freedom, others call it risky speculation today. But Bitcoin's rise changed how the world thinks about money. Bitcoin is a digital currency created to operate without central authority. It was introduced by an anonymous creator named Satoshi Nakamoto. The Bitcoin white paper was released during the global financial crisis. Trust in banks was collapsing, and confidence in systems was low. Bitcoin proposed a peer-to-peer electronic cash system. Transactions could occur directly between users without intermediaries. The problem with traditional money, traditional financial systems rely heavily on banks and central institutions. These institutions control money, supply interest rates, and transaction approvals. Governments can print money, which may reduce purchasing power over time. Inflation affects savings, especially in countries with weak economic stability. Cross-border payments are often slow, expensive, and highly regulated. Many people worldwide remain unbanked or underbanked by existing systems. Blockchain technology explained Bitcoin operates on a technology called blockchain, which records transactions. A blockchain is a distributed public ledger shared across computers globally. Each transaction is verified by network participants called miners. Once verified data is grouped into blocks and added permanently. This design makes altering past records extremely difficult and costly. Transparency and security are core features of blockchain technology. Bitcoin mining and supply. Bitcoin mining secures the network and validates new transactions. Miners use computational power to solve cryptographic mathematical problems. Successful miners are rewarded with newly created Bitcoins. Bitcoin has a fixed supply limit of 21 million coins. This scarcity is designed to prevent uncontrolled inflation over time. New Bitcoin issuance decreases approximately every 4 years through Bitcoin as digital gold. Many investors compare Bitcoin to gold as a store of value. Both assets are scarce, durable, and not controlled by governments. Bitcoin is portable, divisible, and easier to transfer than gold. Some investors use Bitcoin as a hedge against inflation. However, Bitcoin remains more volatile compared to traditional safe assets. Its price can change significantly within short periods. Global adoption and use cases. Bitcoin adoption has grown among individuals, businesses, and institutions worldwide. Some companies accept Bitcoin as payment for goods and services. In certain countries, Bitcoin is used for remittances and savings. People in high inflation economies explore Bitcoin as alternative money. Financial institutions now offer Bitcoin-related investment products cautiously. However, adoption varies greatly depending on regulation and infrastructure. Regulation and legal status. Bitcoin's legal status differs across countries and jurisdictions globally. Some governments regulate it as property or digital asset. Others restrict or ban its use due to financial concerns. Regulators focus on consumer protection, anti-money laundering, compliance. Clear regulation may increase institutional participation and public trust. Uncertainty remains a major challenge for wider Bitcoin adoption. Risks and criticisms. Bitcoin faces criticism due to price volatility and market speculation. Prices can rise or fall rapidly, causing potential investor losses. Security risks exist if users mismanage private keys or wallets. Bitcoin transactions are irreversible, which increases responsibility on users. Energy consumption of mining raises environmental concerns worldwide. These risks require education, responsible use, and informed decision-making. Bitcoin and the future of finance. Bitcoin introduced the concept of decentralized digital money globally. It inspired thousands of blockchain projects and cryptocurrencies. Later, central banks are now researching digital currencies of their own. Bitcoin challenges traditional ideas about trust, money, and value. Whether it replaces existing systems remains uncertain and debated. Its influence on financial innovation is already undeniable today. Bitcoin is not a perfect solution to every financial problem. It is a technological experiment that continues evolving over time. Understanding Bitcoin requires separating facts from hype and fear. Education is essential before participating in any financial innovation. Bitcoin represents choice, transparency, and an alternative financial model. Its long-term role will be shaped by people, policy, technology.
If you like this video, please like the video and subscribe to the channel. See you in the next video. Bye for now.